MBA Research and Curriculum Center and NOCTI have collaborated on this microcredential. This microcredential deals with internal controls used in accounting to meet organizational needs and consists of 4 targeted skills. This targeted skill addresses reconciliation procedures. Reconciliation is a process that compares a business's internal accounting records to external records of some kind, such as a bank statement. Records of a creditor or supplier can also be used. If the business's records and the external records do not agree, then there is a discrepancy of some kind. It may be an internal or external error, but the error needs to be found, explained, and fixed. There are several types of reconciliation based on the specific department, such as inventory, payroll, or human resources. All compare 2 sets of records and account for differences. Account reconciliation is done to verify that the statements are accurate and that internal controls are working. Conducting frequent periodic reconciliations ensures that a business's financial information is reliable at all times. There are 3 main steps to reconciliation. First, compare balances between independent systems such as the bank statements against an internal ledger. Next, verify the accuracy of the reports and statements and note discrepancies. Last, enact detective measures to correct any discrepancies and determine who gave authorization, who had access to the system, and the status of all documentation, such as account balances and records. When verifying accuracy, check for proper implementation of internal controls. This includes proper use of approval authority, which means a manager must sign certain financial transactions. Check for separation of duties, which is also an important internal control. It divides accounting responsibilities among employees so that no one person is responsible for overseeing the entirety of a single financial transaction. When depositing cash and checks, do so in a timely manner, since cash transactions are most susceptible to fraud and error. Checks and cash should be deposited at the end of each business day or another frequent interval that suits the business and helps to keep assets secure. It is also important to carefully document deposits and to conduct frequent reconciliations on a regular schedule. This helps to ensure that banks receive and record all deposits so that statements reflect correct activity. Banks send statements at the end of each month. This is a good time to reconcile the books and account balances of a business by using a bank statement as the basis for reconciliation. This also helps the business owner to understand the status of the business and correct errors promptly. Remember that reconciliation is a part of internal accounting controls that helps see discrepancies through comparison to outside independent statements.